Hello students, welcome to the Recitals in Depth by Vajiram and Ravi. Here we will be covering the economy and infrastructure at July 2024 current affairs topics in details. The broader themes which we are going to cover are as follows: Indian agriculture, money and banking, public finance, investment and infrastructure, and social development. So in the next article today, students will be learning about what is a skill loan, because recently the Ministry of Skill and Entrepreneurship has revised the various norms and standards for granting the skill loan in the country under a particular scheme. Right now, when we'll be trying to understand about what is a skill loan, right? Now these kinds of terms are very important for your examination. Right, because for example in the prelims, maybe the specifics of a particular scheme loan will be asked by the UPSC. Now for example, imagine that someone has to learn about the basics of Microsoft Excel, MS Excel, right? Now these kind of courses are actually paid from various private institutes, and if a particular student wants to learn about Excel, maybe that particular student has to get enrolled, right? And maybe this student want to learn MS Excel because he or she maybe want to advance in particular type of computer skills, and maybe this course is costing around say 50,000 rupees. Now maybe the student does not have that 50,000 rupees. What will be the next course of action? Maybe that particular student can approach the government of India or the government of various states and approach for, or say ask for, a particular skill loan. And here, this is where this particular aspect is extremely important for our understanding under this credit guarantee fund scheme for skill development, where you have to understand, whenever we go to the banks for taking any kind of loan, the banks always ask for some kind of collateral or some guarantee. In financial terms, the guarantee generally means the collateral. Now, obviously we know we have to give the collateral, and here the central government under this particular scheme is giving how much? 75% of the guarantee for the collateral free skill loans. That means for the student, this loan for say this MS Excel part is totally free, and out of this particular collateral, maybe the bank will be giving the loan to the student, the bank will be taking the collateral from the government of the India. And here where we have to understand, this is a collateral free loan which is ranging from 5,000 rupees to 1.5 lakh rupees. This was the previous term. Right now this scheme has been revised to a maximum of around 7.5 lakhs, and this is what the revised skill loan changes had been enacted as of now by the Ministry of Skill and Entrepreneurship. And here this is sanctioned by the scheduled commercial banks under the National Skill Qualification Framework, which is a very important framework which is trying to give a broader architecture with reference to skilling in the country. Right? With reference to this, we have various domains. When we talk about architecture, we have various domains of skills, right? For example, we have IT or software skills, we have various say household or say industrial application skills, right? At various say ITIs in the country. So this is actually a particular framework, a curricular framework, where the government enterprises or say the private skilling enterprises, they have a particular curriculum, they have a particular syllabus, alongside also a particular amount of grading kind of examination, which must be compliant with the National Skill Qualification Framework. And this particular skill loan is also adhering to that particular framework. Right now, apart from the scheduled commercial banks, which were the earlier participants when it comes to giving loan to the students, right now we have also the private, public and foreign banks, which were the scheduled commercial banks, right? Along with foreign banks, we have also right now NBFC microfinance institutions, then small finance banks. So these are the institutions who will be eligible to give skill loans in the country. And here, whatever would be the outcome of the same, whatever will be the outcome of this skill loan, say given provision to the students, here every kind of skill, every kind of course, everything has to be mapped on a digital portal which is known as Skill India Digital Hub platform, which is trying to capture the various amounts of skilling requirements by the country. And this is where we can actually have an integrated kind of a platform where all of the skills of the students, of the various people who want to get skilled, of the youth, will be on that particular platform, and this particular platform will be also be accessible to the various private sector enterprises who can just cherry pick the various candidates from this portal directly. So this is where we have to understand the importance of creation of this kind of portals, and we have to understand why these changes have been enacted. Because this scheme, credit guarantee fund scheme for skill development, initially was not successful. Why? Because there was an issue of under subscription. Why? Because simply the amount was very low. That is, the amount for eligible loans were very low, and also we see right now we have high cases of, say, inflation in educational services, right? So this is what we understand, that over a period of time, the skills offered via various certification courses and so on, they became very expensive, and that is why it went outside the realm or outside the affordability of the students. So that is why these changes have been enacted. Now for all of us, we have to include such examples. We have to include such name of the skills in our main answers, and also for our prelims we need to know about the various components of the scheme. And that is why I want all of you to please answer this in the comments below. Now in the next article we will be looking into new asset class by SEBI, because recently SEBI has come up with an idea of a new asset class for investment opportunity in the country. Now to understand this, first we need to understand what do you mean by portfolio management services. Now imagine that you are an investor, right? You are an investor who is having billions of assets, billions of dollars, right? Or billions of say foreign currency and land, property, gold and so on. So that is, this particular person is someone who is known as high net worth individual. That is, this particular person's wealth, including cash, including bank deposits, property, real estate, the stocks, bonds and so on, this particular person is having, right, in huge amounts. And that is why, you know, these people never keep cash with themselves. These people never keep the money idle. That is what they keep circulating the money. Circulating the money where? In maybe stocks, in maybe say real estate, in maybe various other investment opportunities. And do you think that this person alone, if obviously this person is having vast amount of capital, will this person alone do all this kind of investments? Obviously not. So what this person will be doing, he will be going to someone who is known as portfolio management service provider, or PMS here. What this PMS does, this PMS is having high experienced chartered accountants, stock market brokers and various other financial experts who will be saying to this person here that you give me, for example, say $100,000, for example, right? You give us $100,000 and we will be trying to manage your money. In India, this particular money, for minimum amount of money that a particular person can avail of any PMS service provider is rupees 50 lakh, right? So if someone is having say 50 lakh and that person is willing to divert and circulate his money in various other assets, in various other sources of income, so that particular thing will be managed by this portfolio management services. The very term portfolio means a particular investor will be having various assets, stocks, equity, bond, real estate, gold and various other commodities maybe. So it becomes very difficult for this person to manage everything. That is why there is an intermediary person who will be managing the portfolio of this individual. So this is how we have to understand this PMS service providers are extremely important for the stability in any country, and also to kind of also channelize the investments into various sectors of the country, so that the wealth and the money and the investments that they will be doing, they will be channelizing them into various sectors of the economy. So this is what we have to understand, the importance of portfolio management services. Now maybe this individual will be giving, say for example, 50 lakh rupees per month to this particular company, and then this company will be distributing or investing this money into elsewhere. And similarly, we also have something which we know as mutual funds, right? We also know that mutual funds also enable common people to invest in the market on, for example, say monthly basis, on say a quarterly basis, maybe lump sum or yearly basis also. So mutual funds, the investments range from say as low as 100 rupees to as maximum that you can get, right? So, but we have to understand mutual funds and PMS are quite different. Mutual funds are actually managed by asset management companies. Asset management companies like say SBI Securities, ICICI Securities, and so on. There are many mutual funds in the country. So what they do, they try to pull in the money from the people. They try to pull in the money, all of the money from the retail investors or say the common investors in the country. And from them, they try to invest it elsewhere. Now what these particular mutual fund companies are doing, they're trying to channelize, say for example, thousands of Indians' money into various services. But here, PMS, what they're doing, they're trying to manage some selective high net worth individual and trying to give them maximum of returns, right? So while the return part is also valid here, mutual funds, but this particular service is exclusively denoted for this kind of high net worth individuals. So this is where this particular differentiation is very important for us to progress forward. Now, when we talk about a new asset class, we know, we have just talked about that a mutual fund can range from 100 rupees to any number of time or any number of money. Now, we have understood that the portfolio management services are available to people who invest a minimum of 50 lakhs. So don't you think that in between this money that there is a gap, right? There is a gap that maybe retail investors or the common investors, right? They are investing in the stock markets or say in the mutual funds. Now there are other kinds of people who are high net individuals, they are investing in the portfolio management services. Now the people who will be say falling in this range, or people say who are not as rich as them, right? Or people who are not having say high inclination for investment in the mutual funds, they also want, say this kind of people who are in the gap, they also want something as close to say portfolio management or portfolio management services, such as they would also want to diversify the investments into various sectors. So this is where this new asset class, which has not been named yet by the SEBI, it is just by the name of new asset class, it is yet to be named what the class or what the asset will be, right? So the main idea is to target those kind of investors who are lying between this gap, and for them the minimum number of investment will be 10 lakh rupees, right? In the case of say high net worth individual, it was 50 lakh rupees. For them it will be 10 lakh rupees per investor, where both, best of the both worlds will be there. For example, in the PMS we have had diversified investment opportunities in real estate, gold, and so on in the stock market. In the mutual fund, we used to get high amount of flexibility when it comes to, for example, say systematic investment plan or SIP, that is popularly known as, right, where every month you are contributing 100, 200, 1000, 2000 rupees. Systematic withdrawal plan is also there in the mutual funds, where we get say a particular amount of investments every month, and also on a monthly basis, say after 3 years you will be getting some kind of income from your investment, that is systematic withdrawal plan, SWP. Also we get something which we know as systematic transfer plan, STP, of the mutual funds, which is trying to transfer your investments in the mutual fund into various options if you are subscribing to those kind of mutual funds, right? So broadly, you just remember that in mutual funds we have SIP, SWP, STP features. In this new asset class also we will be having that kind of feature. So don't you think this is a characteristics of the mutual funds? This is a characteristic of the, say, portfolio management services. So it is actually giving best of the both worlds, and it is targeting those kind of individuals who are fitting in the gap. Now, the risk in stock markets are always there. In the mutual funds, the risks are there, but it is quite low. in the PMS or portfolio management services, the high net worth individual, they have high amounts of say wealth, and they would also want to experiment with this with their wealth by taking so many risks. So PMS also takes very high amount of risks, but here new asset class will be lying in the middle of this portfolio, right? So they will be taking middle amount of risk, little higher than the mutual funds, lower than the PMS. Now there are some people who will be eligible, or say there are some asset management companies, right? For example, Axis, SBI and so on, who actually deal with this kind of say mutual fund companies and so on, right? So they will be eligible via two routes. First route is that minimum of 3 years must be in operation by these AMCs in the market. That means, for example, they can have say operation of mutual funds, say for the minimum, at least for the minimum of 3 years, they must be having that experience. Next, they should be managing an asset of say more than 10,000 crores, and this should be in say and they should be managing this for more than 3 years, and no SEBI action should have been taken against them in the last 3 years. That means this particular AMCs or asset management companies needs to be highly disciplined, right? Well, it was the first route. If some companies are not fulfilling this first route, they can actually go via the second route. The second route means they must be appointing a chief investment officer who is having more than 10 years of experience in this particular services. They must be managing themselves 5,000 crore rupees. That is, this particular person, they must be managing some people's assets of this particular type, right? And fund manager, apart from the chief investment officer, there should be also a fund manager whose experience must be more than 7 years, and they should be also be maintaining an asset under management of 3,000 crore rupees. So these are the various things that you need to know, the factual things you need to know. You don't have to remember everything in details, but just know about the say new idea that SEBI is thinking about. And when we talk about why we need this kind of asset class, firstly we have to target that gap, right? We have discussed about that there is a particular gap in the stock market where these people in this gap are not represented. There is a potential market. There is a market potential. There is a market potential for other kind of companies, for AUM, so you know, the asset management companies, right? So to actually try to stake up the rupees or take up the money from the stock market and invest for the rest of the country, and they can also have see profits of their own. Next, there have been rising cases of illegal portfolio management services. So illegal and unregulated, right? So there have been various companies who themselves do not have the permission by the SEBI to perform this kind of functions, but still they are trying to do this, and they are trying to exploit this gap. And this is why SEBI has to bring in proper amount of guidelines, proper amount of rules and regulations for the same. And thirdly, there is also a particular need to diversify or say channelize India's investments or say various say household savings into various sectors of the Indian economy, such as infrastructure, such as various energy sector and so on, to build upon India's future. So this is about for better amount of mobilization of financial savings in the country, because obviously the people who will be investing in this particular say asset classes, they would be bringing in their own money, and this money will be ultimately benefiting the nation going forward, because obviously these particular AMCs, the asset management companies, the PMS, mutual funds, they try to channelize people's investments into various important sectors of the country. And finally, we also need to discuss about the significance of this new asset class. See, the main features here that SEBI is trying to think of right now, yet everything is not clear because SEBI has not formally announced this particular asset class. It is just a particular part of their idea. So their main idea is to try to introduce various kinds of say innovative sorts of investment. Now, the innovative the innovation of investment, say, options that will be given to the various investors is very important for them. Firstly, they are trying to, say, opt for various amounts of equity investments in long and short positions. See, long and short positions in the stock market mean nothing other than that if you are holding up or say purchasing a particular stock of a company, you are holding it for a long period of time. If you are having a short position, that means you are holding for a shorter period of time, as simple as that. So this is what is SEBI is trying to promote a mix of both long and short equity options in this asset class, right? The long means that you are holding a particular stock for a longer period of time, and short means you are holding a particular any equity for a shorter period of time. This will be also giving a mixed balance of liquidity in the stock market. That means easy amount of money can flow in, say, in the short options of, say, equity features, and finally the long options can have, or say the long equity, say, innovative options can have a particular set of asset which will be stretched over a long period of time. Next, the SEBI is also trying to, say, explore the idea of introducing inverse ETF. ETF stands for Exchange Traded Fund, and here inverse Exchange Traded Fund means that it is trying to track a particular index, and whatever the index is, for example, say an index can be, for example, the NSE index, the National Stock Exchange Index. That means all of the companies which are included in the stock market, if, for example, they are increasing, the ETF will also be increasing, because ETF is nothing but the combination of all the shares of this particular index. That means if that index is increasing over a period of time, the returns of an investor of an ETF will also be increasing. But inverse ETF means that if the stock market is increasing, the ETF will be falling, right? Or say the returns from the ETF will be falling down. And if the market is, say, not performing well, it is decreasing over a period of time, the NSE is not performing well, it is decreasing, then the inverse ETF will be increasing. So this is trying to give another innovation. Why? Because in cases when markets do not perform well, your inverse ETF will be performing well. So this is trying to diversify the risk. Diversify the risks in the stock markets. So this is where this kind of asset class can be very innovative, can be very important for the new class of investors growing forward in the country. Now again, like always, a question for you all. Do let me know the answers in the comment below. In the next one, we'll be looking into margin trading, because recently the National Stock Exchange of India, they have actually delisted or struck out the names of some important companies such as Suzlon, Bharat Dynamics, and 2-3 more companies, where they are not allowed for margin trading. Now, to understand margin trading, imagine this very simple example. Suppose you have the Grow app, right? Or for example, the Zerodha app, right? Where you have a total investment in various stocks in the stock market worth 1 lakh rupees. You have invested 1 lakh, for example, in 5-3 or say one stock A, B and C. So you have invested this 1 lakh rupees in 3 stocks. Now what happens, for example, say you need to, say, take a loan from the bank worth of 20,000 rupees for some reason that you want. Now you want to take a loan for 20,000 rupees, right? And you think something that, okay, I have invested 1 lakh rupees in the stock market, and the person at the bank is asking for a collateral or security. Now you are thinking that, okay, I have invested 1 lakh rupees. Can I not, say, give, for example, stock B, where I have invested 20,000 rupees of stock C in the, say, in my particular Grow app, right? So I have invested 20,000 rupees in the stock market, and this is also an investment. And as a security, I can also give my, say, investments from the stock market as a security to the bank, and the bank can give me a loan of 20,000 rupees, as simple as that. And this is actually something which is allowed in the country, because many people, by the virtue of their investments in the stock market, they can get a loan. It is not always that you will be getting a loan only by, say, pledging your house or gold or jewelry, something like that. You can also get a loan if you are having some investments in the stock market. This is simply what we have the benefit of having investments in the stock market, right? Now, there is a particular kind of a trading, or say buying and selling shares in the market, right, which we actually talk about as marginal trading facility. It is similar to, say, buy now and pay later model, where it allows investors to purchase shares with only a proportion of the total share value. For example, you are taking this loan for some important purpose. That is, you want to invest, say, 1 lakh rupees more, but you do not have 1 lakh rupees right now. So what you do, you contact a broker who is having the shares of this particular company, and you tell the broker, okay, see, I have taken a loan worth of 20,000 rupees. I have taken a loan worth of 20,000 rupees from the bank. And why the bank has given me this loan? Because I have a stock C in my application, that is stock market application, which is trying to give me a collateral. So out of this, the bank told me, okay, you can get 20,000 rupees. Now, this is the 20,000 rupees that you told the broker that I have 20,000 rupees. Now, how much you want to invest? 1 lakh rupees. What is the shortage? 80,000 rupees, right? 80,000 rupees is the short, say, money that you have to, say, for example, borrow again. Now, what you do here, you will be, for example, be given this 80,000 rupees. You will be given this 80,000 rupees by the broker. And again, for example, we have to understand the broker will be charging some interest rate here, right? And the bank also will be charging interest here. Now, you can also imagine a situation where this loan, right, you may not even take a loan, right? You can simply go to the broker and tell that, okay, I have some 10-20,000 rupees with myself. The rest money you lend me. Why the broker or the bank will be giving you loan? Just because you have some investment in the stock market, right? So that is why we have to understand, either you can approach via the loan route by the bank, or say by a loan route by the broker, right? You can do both of them together, or say any of them, right? And this is what we know as margin trading. That means you only have 20,000 rupees with you, but how much you are investing in the market? 1 lakh rupees, right? So whatever investment that you do, that is partially with your money and majority with others' money. And on the others' money, you are paying some interest. After you have, say, made some profits in the stock market, you can pay the interest along with the, say for example, fees that the brokers will be asking, right? And keep the profit for yourself. Or if you're not making profit, you will have to give the money out of your own pocket, right? So this is the main aspect of margin trading, where it allows you to do some trading even if you do not have the complete money with yourself. So this is the main concept of margin trading. Now, why recently the NSE has debarred some stocks like Suzlon, like Bharat Dynamics, right, and some other stocks such as PTM, because these stocks are very volatile right now. Very volatile, that means their prices are increasing and decreasing like anything, right? They are defying the laws of the stock market due to many various allegations on the background of these companies, due to the non-performance of the companies, and due to many other reasons. So that is why right now the banks or the brokers, they are not confident as to accepting the stocks as a part of their collateral. So this is why the SEBI has actually tried to put some restrictions on these particular companies, and finally NSE has tried to delist some of these companies from margin trading facility. Now, based on this understanding, I want all of you to please answer this in the comments below. In the next article, we'll be looking into the consumer price index for industrial workers, which has actually risen right now according to the data. Now, this data is published by the Labor Bureau, which is under the Ministry of Labor And this particular consumer price index industrial worker is trying to measure the change in prices of generally used commodities that the industrial workers use is around 88 cities across India, with reference to around 310 to 320 commodities that they generally use in this kind of cities. So this is generally about how the industrial workers in these cities, they're spending their salary, their wages upon. It can be, say, consumption of fuel, it can be consumption of food items, the various electronic items, services, education, health, and so on. So it is including everything that this particular people will be consuming as a part of their day-to-day existence. And as you can see from the trend, see from the trend from July 2023 to June 2024, that is over a period of 1 year. Over a period of 1 year, you can see the index was at around, if I can write here, 139.5, and right now how much it is? Around 150, right? So it has increased by around 10 to 11 points. So this means that there is an increasing amount of inflation in these cities. So in these industrial cities, there is a kind of inflation which is seen. And please do remember, the base year of CPI IW is 2016. And this particular, say, CPI IW is very, very important in something which we know as indexation. Indexation. Now, what is indexation? For example, say a person is earning, say, 10,000 rupees per month, right? And for example, over one full year, that person has earned 10,000 rupees. And in the next year, the person went to his employer and asked that, okay, you have to give me some raise. For example, the employer told that, okay, I will be giving you 10% raise. How much is 10% of? Say 10,000, it is, say, the total wage will be coming out around 11,000. So the next year, the worker is very happy that 1,000 rupees has been increased. Right now, he is getting 11,000. But do you think that this is the full picture? This is not the full picture. Why? Because in the meantime, in this 1 year, as you can see, for example, the inflation was around 11%, or for example, that reason 10% only. Now, if the inflation is 10%, so do you think that then increase of 1,000 rupees will be helping him in the next year, or say this is actually an actual increase? Obviously not. Why? Because the inflation, the very basic definition of inflation is that inflation is referred to the general rises in the price level of various commonly used commodities in a particular country in a particular period of time that decreases the purchasing power of your currency. So you can understand the purchasing power of, say, 1,000 rupees next year is nothing, because if your salary has increased by 10%, right, inflation has brought down it by 10%. So the net zero, right, net is 0% increase. So that is why maybe the worker should have argued, negotiated better, bargained better with the employer to give him 20% raise. Then only the real increase would be 10%. So this is why it is very, very important to understand that the real value in this kind of particular scenario is actually the overall nominal value, right, minus inflation, right? So we can understand the real increase in, say, this commodities, or say salaries and so on, right? It was around, say, 1,000 rupees, but it is, say, to be differentiated by the nominal, that is how much the actual price was or actual wage was, minus the inflation rate. Then only you can get something which we know as real, right? So in our case, the nominal increase was how much? 10%. The inflation was how much? 10%. So what was the real increase? 0%. So that is why the nominal could have been 20, then only you can get a 10% raise. So this is where we need to understand the various concepts of CPI. Now in the comment section, can you let me know any other features of CPI IW, and also can you let me know RBI follows the CPI combined, that is consumer price index, the combined, which is related by the NSO. Now can you tell me some key differences between CPI combined that we have seen earlier also and CPI, IW in the comment section. Please let me know. Let me see how better your understanding is right now. Now in the next one, we'll be looking into some recent SEBI measures to limit futures and options trading. Firstly, we'll be looking into the very basics of what we mean by derivatives, because futures and options are forms of derivatives only. Now simply if we go by this figure only, we can understand derivatives very, very simply. For example, we have various stocks, bonds, commodities such as oil, crude oil, even wheat, rice and so on. We have cryptocurrencies, we have various interest rates, bonds, loans, right? Also we have various market indices such as exchange traded funds. Now, what is a derivative? Derivative is a financial security with a value that is reliant upon or relies upon or derived from an underlying asset or a group of assets. For example, if I tell that a friend of mine, for example friend A, has 100 liters of crude oil, right? Now what my friend does, my friend issues a certificate, or say issued for example a slip of the transaction from which he has brought this 100 liters of crude oil. Now this slip, for example, is having values obviously, right? This slip is actually the transaction amount of the entire record of this particular commodity. Now what that person can do, this person can trade this slip on the stock market. I can buy it, you can buy it, anyone can buy it. Now, is this slip the crude oil? Obviously not, right? This is actually something which we know as a derivative. Derivative is something which is actually backed by assets, for example here in the case commodities. Now this slip can also be backed by a bond, by a stock, by currencies and so on, right? So this is where we have to understand that there are various financial investment opportunities which we know as derivatives. And in this derivatives only we have two concepts: futures and options. Now imagine that you want to buy 10 shares worth of 100 rupees, right? You want to buy 10 shares worth of 100 rupees. For example, right now this particular share is having the value of 50 rupees, but why you would want to buy at 100 rupees? Because maybe in 2 months you speculate the prices of this particular stock will be going to 200 rupees, right? So maybe right now the stock is at 50 rupees, but you want to buy the stock at a little higher price at 100, right? Why? Because after 2 months this stock will be reaching 200 rupees. As simple as that. So what you will be doing? Now you will be obviously contacting a broker, for example, and the broker must be having the stock of this company, and you tell that, okay, right now the price is 50 rupees. I am willing to pay you 100 into 10 if I want to buy 10 shares right now, right? I will be paying you right now, and you will do what? After 2 months, you will be delivering me the stocks, whatever the value would be then. I don't care about the value what is in the future. After 2 months, I have paid you 50 rupees more, that is 100 rupees right now. So you will be delivering me the 100, so you will be delivering me 10 stocks worth of whatever value it is. Now obviously after 2 months, if the stock's value is indeed 200 rupees, you have made a profit, right? You have made a profit of, almost say 100 rupees per share. And if that particular price, stock has decreased below 100, that is, it has stayed at around 50, it has decreased even more, right? So you will be facing a loss. So this is actually how future, is actually traded on the stock market, right? So this is how this is particular thing done. Next, when we talk about the case of options, now options almost follow the same trend but with a slight difference. For example, again, you see that a particular stock is right now at 50 rupees and you speculate that particular stock will be rising to 200 rupees in the future. So you do what? You again contact your broker. you again contact your stock broker and you ask him that do you have the stocks. He will be telling yes I have, and you tell that okay, right now I will be giving you 10 rupees per share. I will be giving you 10 rupees per share, and if the shares prices reach 100 rupees in the next 2 months, so there will be a debt. There will be a debt when it will be reaching 100 rupees in 2 months, then I will be having the right. I will be having a right to either buy the stock or leave that stock. So what I do, I contact the broker. I pay her a fee of 10 rupees per share. Right? If I want to buy 10 stocks, I will be paying the broker right now only 100 rupees. And what I tell, that you book these stocks for me for the next 2 months. I will be observing this stock. I expect that the prices will be increasing. So that is why I will be observing the stock. I will be not buying it. I will be not doing a future contract with you. I will be just observing. After 2 months, if I see that this stock is around 100 rupees per share or 101, 110, then only I will be telling you, okay, you transfer the shares to my account. You transfer the ownership to me. So this is when I am exercising my right after 2 months to buy these shares. Right? So this is what we know as options. So the main difference between future and option is that in futures, what you are doing, you are buying everything right now, right? And there is an obligation on you that you definitely have to buy it because you have entered into a contract. As simple as that. And your loss or profit will be dependent what is the performance of the stock in the stock market. But in the options, what you are doing, you are paying a fee right now. You are paying a fee right now, not the entire amount right now. Only you are paying a particular fee. If that particular stock is above your prediction, that means your profit. If that is not, then obviously will be not buying the entire amount, but you have to pay this fee, which will be your loss. So this is the difference between options and futures, and you can understand the possibility of the losses here, right? If you do not predict properly, you will be facing thousands of rupees of loss, lakhs of rupees of loss, and this is the reason exactly why SEBI has revised the norms right now, or SEBI is trying to change some of the ways in which stock markets operate with regards to F&O trading, that is futures and options trading. As you can see, SEBI has released this advisory, right? Risk disclosure. That is, SEBI is trying to inform the citizens of the country, inform the investors of the country that 9 out of 10 individual traders in equity, futures and options segment incurred losses. That means 90% of the people face losses. On an average, loss makers registered net trading loss close to 50,000 rupees. One particular investor, that is common people like us, they incur a loss of on an average 50,000 rupees. Imagine the case of those people who are having low incomes, right? Over and above the net trading losses incurred, loss makers expended an additional 28% of net trading losses as transaction costs. Not only their money is lost according to the stock market fluctuation prices, but also they are paying high amount of fees to the brokers. That is a part of the transaction cost. The fee to the brokers, this charge, that charge, right, is having a multiplier effect on the loss, right? Next, those making net trading profits incurred between 15 to 50% of such profits as transaction cost. That means if you have made a profit of 100 rupees in FNOs, right, or as high as 50 rupees you have to pay to the brokers. You have to pay to the various applications and so on. So this is what it is, we have to understand is the, say, demerit of investing in this kind of cases, right? So, as also you can look at this particular, say, data. In financial year 19 and 22, the number of people out of 100, as you can see, is as high as 91 to 94% who made losses, right? And also the average profit is very, very less, and the average losses, as you can see, much more higher. So this is where the main important issue is. And in the next one, we will be briefly discussing what are the various measures that SEBI is trying to take. We will be discussing in very simplified manner, not going into too much of detail. Firstly, SEBI is trying to minimize the contract size. Contract size just refers to the amount of units of FNOs that you can buy in the stock market. So it is trying to minimize it, to minimize the loss. Second, upfront collection of option premium must be there. There have been some cases of brokers who did not collect that fee in options at the very time of transaction. So that must be done right now to discourage those people who are taking risky guesses. Intraday monitoring of position limits must be done. For example, say intraday is the arena of the stock market, where people actually try to speculate on the various prices of stocks and the various securities traded. So in these cases, the people have to be monitored on what kind of transactions they are doing and what are the position, or what are the various investment avenues in the stock market they are investing in, what kind of futures, what kind of options, which kind of companies, which kind of sector, which kind of transaction, what is the transaction limit. Everything must be there on a day-to-day basis in intraday. Intraday is different from delivery cases of stock market, where in delivery you just, for example, buy 10 shares at the market price and you leave it for a long period of time. But in intraday, you have to buy the particular share and sell it within that same day itself. That is why the term intraday. And finally, there must be rationalization of weekly index products. We have various weekly index products such as NSE 2000, NSE 20,000, BSE 50,000. So we would not go into details of what is that. But SEBI is telling that we can have one or two options only. We should not be giving too many options to the people to confuse them, right? Because only technical people can understand this kind of indexes, but not everyone. So that is why we must be trying to rationalize this kind of weekly products. So this was for this article, and let me know the answers of this particular MCQ in the comment below. In the next article, we'll be discussing, according to recent reports, how India's patents have been increased over a period of time. And here, firstly, we'll be starting with what is a patent simply. See, we all know that patent is something which we also associate with intellectual property rights, or IPR. Intellectual property rights is a legal document giving the holder of the particular document the exclusive intellectual property rights over a particular invention, and patents are an element in encouraging innovation in the country. Now, for example, say this is a particular pen, right? I can use this pen to write on a piece of paper. But can I innovate this pen to make it also write on the board like this, as I'm writing right now over this entire length of the video? Now there must be someone in this world who have this idea that there can be a screen, there can be a pen, and this is not an ordinary pen, this is a pen which can write on the screen. If you take your own pen and try to write it here, it won't be possible to write. So this is a kind of an innovation, right? And how that innovation has been possible? Due to hard work, due to innovation, due to various rounds of determination and scientific methods and various amounts of, for example, in some cases, costs involved in this kind of innovation. So the holder of any intellectual property rights is actually the owner of the patent, right? And in India, we have the Indian Patents Act of 1970. So under the architecture of this act, any kind of invention which is very novel, which is very new, if that is recognized by the government of India, that patent will be granted for 20 years. So for 20 years, that particular holder will be the owner of this particular process. For example, this pen, if that particular person has invented this pen, for 20 years, up till it is renewed, or up till new kinds of innovations, new kind of designs has been done into this pen, it will be there for 20 years. And till that 20 years, any company who would want to manufacture this pen like this would have to take permission. In this case, maybe have to pay some, say, royalty fees, some various amounts of money to the holder to build this, or say to design and manufacture this pen. So this is how the entire aspect, this entire idea of patent is functioning in the country. And when it comes to, say, granting this pen a patent in India, do you think that this pen will be granted patent for the rest of the world? No. When we talk about the jurisdiction, of patents, right? It is only, for example, if the Indian Patent Act 1970 has granted the patent for this pen in the country, it will be only valid in India only, right? It will be not valid in US, it will be not valid in the UK, where you have to separately file applications to the US body of patent, to the EU body of the patent offices, the applications, then you will be getting the patent in those countries. So the jurisdiction is very important part that you all have to remember for your prelims. Now, why do you think that patents are so important? What is the significance of patents? Firstly, it encourages entrepreneurship and innovation in the country, right? That is, for example, most of the startups, as you can see right now, they are actually thinking about ideas how to solve our day-to-day life problems, and they often come with various amounts of inventions and so on, and for which they apply for patents to increase profits in the long period of time. And that is why, if you understand, if you can actually get a patent, you can actually become rich. And this is the case where most of the startups are also trying to increase their investments and also increase their activity, and this is ultimately good for the nation. This will be creating more and more jobs and more innovation. Second, it leads to creation of something which we know as knowledge economy. Knowledge economy. That means the benefits of patents, the benefits of inventions like this and very other inventions, they do not limit, right, to that particular holder or that particular company itself. Various other companies will be getting the idea of the same, various other academics, various other research institutions will also be hearing the same. So they will be also trying to explore how this can be done. And also over a period of time, from the date of filing of application up to 20 years, as we have just seen, right, the patent is actually along with the holders. But if, for example, the holder does not renew the patent, that particular patent becomes open to all, right? So that is when also many drugs, for example, pharmaceutical drugs in our case, right? Many companies in India, pharmaceutical companies, these try to manufacture those kind of drugs, and this is why India is also known as the pharmacy of the world, because of the huge production of this kind of generic medicines. Third, it leads to higher and higher amount of economic growth, right? Higher amount of knowledge economy leads to higher amount of economic growth. This is also supplemented by a famous economic model known as the Romer model of economics, where we, according to this Romer model, the benefits of knowledge economy, that is the spillover benefits, is actually contributing to the success of developed nations such as US and UK and so on, which had invested a lot on technology and a lot on, say, patent applications and so on, which has led to their economic growth. And more amount of innovations will be spilling off to the rest of the people, and they will be then investing in the various opportunities. So this is where the significance of patent lies, and here we'll be seeing some of the data that is very important for your mains examination and also your prelims examination. As you can see here, look at these trends. In the last 5 years, with reference to patent, design, trademark, GI tags, which are also a form of patents, right? Copyrights, semiconductor designs. So we have seen that over a period of time, right? The overall patent applications have been increasing consistently. The total patent applications have been increasing consistently. And also, if you see the semiconductor design component, they were also, say, not present from 1920 financial years, but increasingly as of the present financial year, we have seen that it is increasing over a period of time, apart from the rest of the figures also, correct? Also, as you can see in the recent past, the GI tags granted in India, they have been also consistently increasing over a period of time. So this kind of information is very important, highly crucial for your prelims examination. Apart from this, if you can see here, that applications, received in IP offices of different nations in 2022, China tops in the entire world, led by US, Japan, Korea, right? And finally, we have the, we have our own country, India, right? Where we are just behind the overall European nations, right? So we have the European Patent Office, we have just shy of that. So this is where you have to understand India is also lying within the top 10 countries in the entire world with reference to patents. Also, if you look at some other data, every 6 minutes, there is one technology patent which is sought in the country, for which application is filed at the Indian Patent Office. There is 1 lakh plus patents from March to March 2023, 2024. Every working day, there are more than around, say, 250 patents which are granted in the country. So we can understand the significance of patents in the nation. And here, at the very end of this topic, I have a MCQ for all of you. Please do let me the answer in the comments below. Now coming to the last article today, we'll be discussing about the zombie startups, which is in the news right now. We'll be trying to understand what these startups are all about. Now, from 2022 to 2023 onwards, we have seen many global conflicts, right? We have been seeing, say, decreasing amount of demands from the Western nations because of generally their demographic profile, they are aging over a period of time. We are also looking about, say, the post-pandemic economy, where in this particular economy, or say after the COVID, the demand is also, or say that's entire supply chain of the entire global affairs, they have been affected due to various, say, pandemic-related issues. And also, we have been time and again hearing about something which we know as recession. Recession is a contraction of economic activities for consecutive 2 quarters, right? So, there are various things that we have seen which are not good for the economy. And that is why all these kind of aspects have led something which we know as funding winter. Funding winter. Funding winter reference is actually denoted to the Western media, which means that funding for the startups have been decreasing over a period of time. That is, which is known by winter, associated with decreasing trend. And as you can see from this graph also, the number of startups to have shut shop as we can see here, 2024 from 2021, right? The number of startups which are actually trying to not do any kind of business, they are increasing, right? And also they are high amounts. And also, as you can see, right, in 2024, after declining in 4 quarters, right, we can see that some of the Indian startups are having better amount of trends with reference to funding, but when it comes to the entire global economy, there are some startups which are totally loss-making, right? These are loss-making startups which have not yet been able to deliver any kind of profits for their investors. And these are the kind of startups which are, for example, they're entirely loss-making, their balance sheets are very poor, and despite that, they are running. These are actually known as the zombie startups. Zombies are actually those creatures which do not have any life in them, but they still can talk, they still can be violent, right? But in this case, the startups, they are loss making, their balance sheets are very low, but they are not able to generate any kind of profits to the investors. So this is the general rise in kind of, say, zombie startups in the entire world. But as we can see in the case of India, right, this is not the same case here, correct? So this is where you have to look at the green shoots for Indian startups too. Now, with reference to this, again, we have a question for you, all of you. So please do let me know the answer in the comments below. And with this, I thank you all for being a very patient audience. Till we meet again in the next month, do not forget to revise your recitals over a consecutive week or 2, and do try to watch the entire session along with your recitals. So thank you for your patience. We'll be meeting again soon. All the best and best of luck for your future. Thank you.